Let's take a look at your market news now. Stock markets rallied on Monday in Asia, building on strong pre-weekend gains, with investors buoyed by forecasts busting Chinese manufacturing. Now, after Europe and Asia posted gains, trading on Wall Street began brightly, despite weaker than expected government data showing that US consumer spending declined in February. Confidence that an agreement will be reached in the trade spat also helped overcome concerns about the world economy that saw a sharp sell-off in equities at the start of last week. Green across the board in Asia, as the Nikkei in Tokyo picked up 1.4% to 21,509 points. The Hang Seng was moved up 1.8% to 29,562 points, and the Shanghai Composite was the biggest gainer, rising 2.6% to 3,170. US stocks rallied on Monday, starting off the second quarter on a strong note, as upbeat manufacturing numbers from China and the United States eased worries about slowing global growth. The benchmark S&P 500 index, which is now 2.2% below its record closing high in September, triggered a golden cross pattern in which its 50-day moving average crosses above its 200-day moving average. Many believe that the technical signal could bring in more gains for the stock in the short term. The Dow Jones Industrial picked up 1.27% to 26,258 points, while the S&P 500 gained 1.2%, ending the day at 2,867 points. The Nasdaq Composite moved 1.3% higher, closing out at 7,828. Let's get more on the markets now. Arabile Gumede is standing by at the Johannesburg Stock Exchange. Arabile, good afternoon. What's happening where you are?
Good afternoon to you, Nzinga. Well, the market picture itself has been pretty flat, though, thus far when you take a look at how things are faring. And that's not only a picture for South Africa, across over into Europe as well. Only 0.7% gain for the FTSE 100, around 2/3% there for the DAX, and the CAC 40 as well, going up around 1/3%. But the good news, I suppose, on that front is you are seeing some gains. So no real equity news to speak of on the local front. Of course, the likes of Aspen, however, seeing some negative trading coming through today, and this is after yesterday they saw themselves announce and of course come onto the A2X, or that alternative exchange, shall we say, as well. So that will certainly help them, and that exchange moving on to around 2.2 trillion rand with regards to its market capitalization as well. So a bit of news on that front. But the Brexit saga continues, and that will continue to be some sort of focal point as we focus on that and the trade situation between the United States and China. But for now, let's unpack exactly what the numbers look like across the globe, and we'll get into a discussion in just a bit. Well, when one takes a look at that picture, then 14 Rand and 8 cents against the US dollar for the South African currency, one can certainly tell that things have perhaps gotten a little bit better, but the sustainability of that will be a question mark. Sean Morrison joining us now from IG. Sean, thank you so much for the time, but let's unpack that market picture now. Pretty much flat when one takes a look at the board as a whole, but with regards to equity news, not much in it. But would you say that there's perhaps some sense of shall we say, sustainability with regards to the negativity we're seeing? I mean, the banks themselves still down, and that, really on the back of that stronger South African currency.
I'd go the other way and say that the sentiment is now weighted towards slightly positive, even though we're seeing some declines now. Manufacturing data out of China sort of spurred that sort of optimism. We're all worried about slowing global growth. We have this, the trade, US-China, they're re-engaging this week. The deputy premier of China coming through to the US with an entourage. So there's some progress there. The banks, they've been under pressure. Nice rebound following the Moody's news on Friday. So I'm cautiously optimistic about sort of the market, even though we are flat to sort of slightly lower on the day today.
It doesn't really help much that there's no real direction, right? There's no real sense of what is next, and that this comes after the back of earnings. But is it a good sentiment to have no news? Is no news good news in this regard?
Yeah, I think, I mean, we're putting it into context. Yesterday, the banking sector was up, I think, 3%.
Yeah.
So today, you can attribute some slight weakness to some profit taking. There's not an eagerness of selling to, erode those gains that we saw. So that's why I say, if we're on this, on balance, I'd say that momentum is slightly more positive than it is negative at this point in time.
One of the other factors then moving perhaps not just local markets, but markets globally, that Brexit saga continues to be one that gives nothing every single day, right?
Yeah. Yes, another failed vote yesterday, the UK Parliament. It does seem to be a bit much of the same going on. I know they're in discussions today to proceed with, what comes next in terms of another vote, which we're not that optimistic about. Deadline for Brexit now moved to 12th of April. If you look at the polls and that, in terms of banking and bookmaker probabilities, we're sitting at about a 20% probability that there will be a no-deal Brexit. So I think a Brexit is still on the cards. I think, we're just leading towards a longer-term delay for Brexit. So instead of this short couple-of-week delay while we finalise, discussions, it's more of a, we'll see you back in 2020.
So you reckon markets are pricing in that there will be a deal with regards to Brexit?
Yeah, if you look at, in the currency markets, you've seen the pound start to strengthen, leading into that first delay of Brexit. It's given back some of that, the short-term gains, but, it's coming off quite depressed levels as well. So we are seeing some momentum, and I think that is reflecting some sort of optimism towards, a Brexit deal being done. Although I'm not optimistic that's going to be in the short term. I think it's going to be in the long term. And this sort of back and forth is going to continue in Parliament until we get that long-term extension to that Brexit negotiation.
They certainly wanted to come to some sort of
I think the key factor here is that no one wants a no Brexit scenario, and they don't want the uncertainty that follows with that.
Yeah. Another thing, that oil price chasing $70 a barrel, that's not going to be helpful for non-oil producing countries like ourselves.
Yeah, and we're going to feel that in our wallets tomorrow when we have that hefty oil price increase or petrol price increase. There's been a bit of a perfect storm for oil at the moment. We have OPEC, obviously, their production's at 4-year lows. Yeah. We've seen, last week we saw the rig count. The US rig count is actually at year lows. US production has also come down. So there's a supply issue. The supply is being reduced in the market, and that's caused oil, where it's been trading in that range, Brent crude in particular, between about $64 and about $68 per barrel. We're now seeing it start to break out, and so it's starting to get stronger, that oil price. And our next target on there is probably about 71.50, another 4 or 5% from where we are.
Does it stay there for long? Because obviously we wanted to stay as long as possible for longer.
No one can tell the future, but we think that it's probably the short-term gains. I think there will be some sort of equilibrium. I think we could see oil returning back to that range, at 64 to 68 range.
But this is the new normal, right? I mean, double-digit oil prices is kind of the new normal. Gone are the days of 120, 130, if not more.
Yeah. I think, as soon as it really does start to tick too high up, you bring on the higher cost producers into the market, and that should, cause the price of oil to come back down again. So, I don't think famous last words. Who knows what happens? But I'm hoping we don't see $100.
No, look, we'd take it. We'd certainly take it. But with regards to just the commodity space as a whole, we do say that these are cyclical. But are we feeling that we're at a point where it's reached perhaps a trough now, or is it really still at at levels where it's still gaining?
We are at a point where, in the short term, it's definitely gaining. Yeah. In the longer term, there's lots of sort of macro catalysts which can inhibit those gains. Sure. Obviously oil is also tied to global growth, and there are concerns that the global growth is going to slow. As part of the reason why we saw that slight pop on Monday, we get one small data point out of China, and then all of a sudden markets are celebrating because they are starting to price in a slower growth within a world economy, and that would equate to softer oil demand.
Look, Sean, it's a market picture in itself that we'll continue to unpack and see how things fare. 1408 as we keep mentioning about the South African currency, but really appreciate your time there as well. Around 3% down for Aspen Pharmacare, SAPI as well going down 1.7%, but an increase there for Rainet going up 1.5%, 1.33% up for Nepi Rockcastle as well. But of course, following that huge dip they had earlier this year, that doesn't necessarily change things too much for them. We'll continue to unpack that market movement. As we said, the oil price then chasing that $70 a barrel mark and things continuing to progress on that front. So shares across the globe seemingly headed in a more positive note, as Sean has mentioned as well. So we'll continue to see how things fare. And of course, towards the close of trade, we've had some positivity on the JSE oil share. Does that continue for the rest of today? For now, pretty much flat. And that's where the buck stops. Back to Nzinga right after the short break.